Hey everybody, it's Hammer. Today is November 30th, 2022. I am joined this week with our guest, Adam Baumlein. Did I pronounce that correct, Adam? It looks like an easy one.
You got it.
Baumlein. I got it? Okay. All right.
Yes, sir.
So Adam, please do me a favor. Go ahead and take a moment, introduce yourself to everybody.
Adam Baumlein. I'm a moderator here in Veta VA, VVA 5. Been a mortgage lender since 2004, most of the time as a mortgage broker, but have worked in other channels as some very large banks and correspondent lenders too. So got a pretty good idea of across the board on lending.
Awesome. Well, thanks for joining us this week. How was your turkey day?
Good. Fulfilling.
Yeah.
Too much.
There you go. Everybody watching, I hope you guys had a good Thanksgiving as well. Remember, if you do have any questions or comments, please go ahead and say hello. Introduce yourself. If you look on Facebook, there's usually a link up above here somewhere that you can click and we'll see your name. But a lot of times it just shows me Facebook user in the comments. So if you introduce yourself, tell us who you are. If you're a consumer, a professional, a real estate agent, a loan professional, tell us who you are. If you're watching on the replay, definitely go ahead and let us know. Do me a favor, give us a hashtag replay. It's really important for us that we know that we're serving the community, and the way that we know that is through your voice and you guys telling us. So if you're watching on the replay, please go ahead and give us a hashtag replay. Otherwise, let's jump right in. And so let's go in first with a rate recap and talk a little bit about what happened to rates last week. So I'm going to tell everybody what I saw, Adam, and then I'm going to turn it over and ask if you've seen something similar, right? So basically, rates last week were once again almost unchanged. Very, very little movement in rates last week, especially because of the holiday. Things tend to, of course, get very quiet on Thursday and Friday. Most lenders are closed on Friday, or they've got, a ghost crew. So there's not usually a lot of activity. Markets are generally very quiet. Of course, the stock and bond markets are closed on Thanksgiving, and then on Friday, they close early. Most traders are actually taking off for a long weekend starting mid-morning on Wednesday. So things tend to get very quiet around the holiday. So rates were very steady. We're seeing VA rates, VA mortgage rates in the low sixes. Again, that's an average. Remember that this is not an offer to lend, and that your unique situation, you should always have it priced out by a mortgage professional, and you should always shop around. But generally, just to give you all an idea, we're seeing, VA rates that are generally in the low sixes. And, for if you're not going the VA route for any reason, maybe, there's certainly times that it doesn't happen. Conventional loan rates are actually a little bit higher. So around 6.5 to 6 3/4, I think is very comfortable, depending on your credit score and how much money you're putting down, and they can go higher from there. So that's generally what I saw last week. Adam, what about you? Is that what you saw? Something similar?
Yeah. I think it's pretty similar. We didn't have a whole lot of movement last week, and you probably touched on previous weeks and just the volatility and things changing, week over week. Where a couple weeks ago we kind of had that pullback, which was good.
Yeah.
Last week we didn't see a whole bunch, but it's kind of remained in that a little bit lower than where it was.
Which we'll take for now because it's better than shooting back up into the sevens.
So. Yeah, 100%. It's definitely, at least in my world, spurred more activity. I see a little bit more people moving and being a little bit more comfortable with things than maybe where they were, a couple months ago.
Yeah, I think people are coming to terms with where rates are today and less concerned that they're going to take a loan at the worst possible time, and that things are suddenly going to fall down again. I think people are realizing this is where we're at for now. In order to fight inflation, this is where rates, not just mortgage rates, but, all kinds of rates, credit card rates, car loan rates, personal loan rates, those rates have all gone up as well. And that's in order to slow down spending, which will slow down inflation. So, but as far as where are rates going to go next, everyone always says, Hammer, what's going to happen with rates? And I'm going to tell you that on June 9th of 2024, rates are going to be at 5.37. Write that down, everybody. No, yeah, unfortunately, we can't be that good, but we do get an idea of where rates are going with a bit of a forecast based on the different market conditions. And I would say that rates this week, we could see a little bit of volatility tomorrow and Friday. So this, of course, being taped on Wednesday, the 30th. Tomorrow, we get what's called PCE inflation data. So there's two different inflation reports that come out. There's the CPI inflation report, which is Consumer Price Index. And that really, in theory, is a basket of goods where they track the cost of the goods in that basket. There's like 250 different things, I think, that they put into that basket, and they track that, and that's where they come up with inflation. And then the PCE report's a little bit different. That one incorporates what they try to make it what people are really spending, and it includes a lot more with healthcare, which is a very big expense. So that one tends to be a little bit different, and we're going to get that report tomorrow, but it's the same time period as our last CPI inflation report. And that CPI inflation report, which came out on November 10th, I believe it was. Does that sound right, Adam? I'm going to look. November 10th. Sound
10th.
good?
Yeah.
We saw a huge improvement to mortgage rates that day and the following day. And that was because that inflation report was finally showing signs that inflation was abating, inflation slowing back. Remember, we've seen rates across the economy, like I talked about before, going up, trying to curb spending, slow down the economy, which will help to bring inflation down. And we're finally seeing signs of that happening. Report, if it comes in positive, I'm going to give my opinion, but what do you think? We could see rates get much lower from here, or do you think they kind of just say, hey, that's good, and stay where they're at?
I think that trend has to continue. I think the consensus was, at least from the research I've done, is, at least with the CPI, that is a year-over-year replacement, right? So November of this year replaces November last year, December this year, December last year, and it would be getting better or lower, which would mean what they're doing technically is working, right? And we get into, first quarter, second quarter of next year, where maybe we really do start to see some pullback there. But these are things, it just takes time, right? Because it's a month over month number.
Yeah, we see month over month and year over year both. Yeah. So
yeah. Mm-hmm. Yep.
And so for tomorrow's PCE data, I don't think we see rates move too much, though. I wouldn't necessarily hold off. Most people, if you're currently under contract, if you're close to locking in a loan, talk to your mortgage professional. If you're closing soon, you may want to consider locking before the volatility that could come Thursday and especially Friday when we get jobs data, because the labor market is that other component that has to come down in order to see inflation improve. And it's unfortunate because it means less jobs, means more layoffs, means higher unemployment. But if we're going to see inflation kind of get in line, that's usually part of that process. So if this wage report and this non-farm payroll, the jobs data, if that comes in showing the labor market's still really strong, we may not see a very strong reaction in mortgage rates. In other words, they may not improve. They may get just a little bit worse, but maybe for a day or two, and then kind of go back down next week. So what does that sound like to you?
I don't see any major swings really in either direction. I don't think, and probably you don't either. You know what I mean? We're kind of in this period of we got to get through this and see what these numbers are so that this works. And then we come back to, okay, numbers are getting better or whatever, but I don't think we see a big swing in either direction, at least from the data that we're seeing.
I agree. Yeah. So if if you've got something that your loan is closing in the next couple of weeks, you could see a little bit of movement, towards the end of this week, but overall we're not back up into the 7s, but we're also not expecting to drop back into the 5s either. So that's kind of where we're at. And as far as longer term, going into December, what I've got rolling across the bottom, we're watching, there's 2 dates that y'all want to circle on your calendars. There's December 13th and December 14th. So on the 13th, we get a new CPI inflation report. Like Adam said, we're looking to see, is there continuation? Are we going to get 2 good reports in a row? And I know what you're saying in the year over year and where that source comes from. I got to admit that thinking kind of eludes me. I'm a simpleton, because basically there's a lot more that goes to it. It doesn't just replace the previous data, but the bottom line, we need to see, if we see inflation improving for a second report in a row, that's going to be very good for keeping rates down and possibly improving them a little bit further. And then we're going to get the Fed meeting on December 14th, and we'll talk more about that next week as well. But that's where we do expect the Fed to continue to raise rates. Believe it or not, they're going to raise rates all the way up into February, March, May of next year. They're doing it at a slower pace. So every meeting, which they're about every 6 weeks, every meeting they're raising rates. In the last 4, we've seen 3/4 point rate hikes. And in December, they're expected to do a 0.5 point rate hike. So that's already been priced into mortgage rates, though. If we see that happen, you're not going to see mortgage rates get worse. The Fed policy rate, which is called the Fed funds rate, is, it's already been forecast on where that's going to be. And, the rest of the markets react very quickly to the speculation and expectation of where that'll be later. So if we think, as we hear news that maybe the Fed will, lower that rate again September of next year, November of next year, we'll see mortgage rates actually improve at much earlier in 2023 on the idea that the Fed will, lower rates again later in 2023. So that's why we're not likely to see mortgage rates get much lower from here. Would you say that it's a good time to buy a house now, Adam? And, with all that stuff?
I do think it's a good time. I think with where the rates are at, it's taken away some of your competition, right? Because the rates are not at the historic lows. And that takes away the bidding wars and the offering over asking and offering over appraised value and things like that. So I do think that it is a good time to purchase. And if what we've talked about holds true, then if you're doing a VA loan, you've got the VA IRRRL that you're going to be able to take advantage of as these rates decline, if they do, and able to get a better rate. Whereas if you wait, okay, now the rates are lower, you've got the competition there with you, and it could change that pricing. So,
yeah. So anybody that's getting a VA mortgage, the IRRRL is the interest rate rapid refinance loan. It's got less requirements to refinance as far as paperwork. You do have to, see a true benefit of the refinance. It has to see significant rate reduction. You also have to make 6 monthly payments. You've got to be in the loan for 210 days. But it's just out that window. I mean, if you're buying a home now and you're like, Adam, these rates, I don't love these rates. And Adam's going to say, I don't love them either. But if you can afford to buy a home now, and what you said is so true, that we've seen a good balance. Now we're seeing that it's easier to get an offer accepted. There's not these large bidding wars. We've talked about on other episodes of this where we've seen seller concessions, meaning the seller is contributing some money to the transaction in the form of helping you with closing costs or helping to maybe improve the rate a little bit. So there's those things are happening. But what happens there is a lot of people are then afraid, well, hey, what happens if I buy a house now? Isn't it going to lose a lot of value? Aren't we going to see a housing crash?
So we just had that question this morning asked, within Vetted VA. And of course, things can change, but I feel like we're still in a housing shortage, whether it's rental housing or ownership housing. We did not build enough homes basically for the demand. So if you go back over the decade or whatever, and there's a pent up demand there. And until that changes, that's really what's driving a lot of this. And so there's just not enough housing. So,
yeah, we've talked about this on previous episodes. For those of you that may not have seen that, you definitely want to remember that we've got people that are aging at home now. So there's more baby boomers, a very large generation that are aging at home. So they're not selling homes as it's like we would seen previously. So there's less inventory on the market. We have a lot of people over the last couple of years that have gotten phenomenal mortgage rates, historically low, 2.5%, 2%, 3% mortgage rates. And those people, not only do they not want to move, but a lot of times you can't afford to move. I mean, if you've got your 3-bedroom, 2-bath home and you've got a rate of 2.5% or 3%, well, and you've got a new baby on the way and you decide, well, we want another bedroom. Going to that next other house, well, giving up this mortgage rate, taking a rate in the 6s right now, that's going to significantly increase that payment. And people
and a higher purchase price too, right? Because values have gone up. So you have a twofold.
Yeah. Well, even if you argue that you're going to make money by selling your house, you can, that might even offset. But I agree with what you're saying there. But just so but the bottom line there is that people are not moving. So we're still seeing a tremendous shortage to inventory. And normally when rates have gone up as quickly as they have, which is something that I've been doing this for 22 years and I've never seen anything like it, where we've seen rates go from the 3s to the 7s in the course of months, not even, usually it would take years. And normally when that happens, we would see the price of homes come down very quickly because there's always an affordability index, and you're going to have, if people have a higher interest rate, they have less, they still have the same amount of money to work with, and that means that home prices tend to come down a little. We're not necessarily seeing that full behavior this time because of like what you said, we still have a housing shortage. We have people not putting homes on the market. Inventory has improved a little bit, but not a lot. So it's still that's why it makes it a great time to buy a home right now. My kids just bought a home a couple months ago. My brother just bought a home a month ago. I wouldn't have counseled any of them to have made those moves if I thought that, this was going to be a bad time. So this is, I'm all in it. So awesome. Well, it seems definitely holiday attendance this week. It's a lot lower than usual. So if anybody has any questions, please go ahead, pop them on there. Let us know. Remember, even if you are on the replay, do us a favor. Go ahead and give us a hashtag replay. Let us know that you were here. Put any questions on. We'll be glad to answer them. We do monitor the posts through the week. Adam, I'm going to wrap it up then. Is there anything that you want to share with anybody?
Like we talked about, I do feel like it's a good time to purchase a home. You've got less competition. You've got rates that have pulled back a little bit, like we talked about a couple of weeks ago. Of course, everybody would like to have them be better. I would too. It would make my job certainly easier. But I have seen activity kick up because of that little bit of pullback there. And if these things hold true, and the rates, the inflation fighting is happening, and rates do pull back, it's possible we do see a lot more competition come into the marketplace, right? Because people are going to want to get a home. You want to get ahead of that if you can, and if it makes sense for you to do, and you're ready. It's definitely something to consider.
Absolutely. I agree. Waiting till rates drop just means there's more competition, and we're going to, hopefully we don't see that same unhealthy increase to home prices that we were seeing. I mean, 20% increases in prices was just normally for perspective, everybody, you'll see 3 to 5%, let's call it 4% as an average, year over year. And we were seeing tremendously more than that. And to the point that's just not healthy. When you're a homeowner, it's awesome because it's a great way to build wealth. And again, that's another reason why you should own a home. Not to mention just the fact that you can paint the walls any color you like. You can poke a hole in the ceiling if you want to put a new lamp, whatever you want. But it's also, as a financial vehicle, a lot of wealth is created through home ownership. So
there's probably very few times where that home ownership has not in history, panned out to where you've gotten significant equity on that over time, right? As an investment.
Absolutely. Yeah, absolutely. So awesome. Well, everybody, thanks again for joining us. We'll be here next week. Let me see. I got a little one that says that where's the join us next? There it is. Join us next week. We do this every week, 12 o'clock Eastern. You can do the math on your time zone from there. And everybody have a great one. We'll see you next week. Bye-bye. And Adam, thanks again for joining us.
Yes, sir. Thank you.